Good afternoon and welcome back to the Money Control live stream. You are watching markets with Santo and CJ. Well, it's been a very strong session for investors. If you look at across the board, mid caps, small caps, and the large caps have seen very strong gains in the session. If you look at Nifty and Sensex, they both look set to close on a positive footing, led by some good global cues emerging throughout most of the sessions. But the only concern probably would be, Santo, I think the strength in the India VIX, or the fear gauge as we call it popularly. There, the India VIX, although it was down about 4.5% in the morning, is now up about 1.5 to 2%, and clearly suggesting that some people out there are now shorting the market.
Well, CJ, you mentioned the strong global cues, fair point, but I think at this point, investors just seem to be glossing over the weakness in China. Remember, China is a major consumer, right? And if there is weakness in the Chinese markets, obviously it's going to have ripple effects through the rest of the global economy.
True. Santo, I think there is a lot to comprehend. I think there is a lot of conflicting data points. I mean, if you look at oil, it has fallen below $90, which has been what people were, dreaming about when we were sitting at $120, right? Then you have inflation also. If you look at it month-on-month basis, inflation is clearly showing signs of softening at home. Even in the US also, we saw that inflation data was softening. At the same time, the industrial production data that came out, or that came out from China, or you talk about the US, that is showing that there is some slowdown. So probably there is hope that maybe central bankers will not be aggressive. But at the same time, of course, demand is also a point of concern then.
Well, it's true that markets are forward-looking, but sometimes they seem to be too forward-looking, which appears to be the case at this point in time, where they are jumping over the part where there actually has to be a rate tightening cycle, which is yet to play out and the effects to be seen. And already we have moved on to a place where our interest rates have come down sharply and earnings are up back sharply.
But I think, Santo, one thing is for certain, that if the current scenario does continue, wherein we have seen this rally and the strength in the market along with interest rate hikes, then one person who would be happy would be Rhythm Desai in Morgan Stanley, because he has been talking about this bull market being similar to the 2003-2007 bull market, when we also saw interest rate rising across the world, but at the same time the bull market sustained itself. So maybe let's see. It seems it was a big bet.
Just a word of caution, though. I've said this before. I'll say this again. Momentum can be a double-edged sword, right? It can cut both ways.
That is true. I mean, that said, let's quickly move on to some of the stocks that are buzzing in trade today. Starting off with Santo.
Muthoot Finance, the stock has taken quite a bit of beating
absolutely
today.
Horrendous day for the
company. And one of the major triggers appears to be the report from CLSA, in which it has cut both price targets as well as earnings estimates. Now, both gold loan NBFCs, Muthoot Finance and Manappuram Finance, have been struggling over the past few months. The main reason for this is that banks have stepped up their activity in the gold loan segment. Earlier, it was always felt that gold loans would be the preserve of NBFCs like
exactly.
Muthoot Finance and Muthoot Capital and Manappuram Finance, given that there's some personal touch also involved in this kind
and
of
of course, they were probably the first movers in that segment, and but now they enjoyed that brand loyalty.
Yeah, now the aggressive stance of banks means that there are teaser loans all around, which is affecting yields of everyone. But now the banks seem to have decided that they will dig in there. This is a lucrative segment, and they've actually been wresting both market share and customers from gold loan companies, because of which the concerns over the performance of both companies. Muthoot Finance in particular has taken, Muthoot Capital in particular has taken a beating today. CLSA has cut the price target for the stock to 1200 from 1225 earlier. That's not much of a cut, but the bigger cut comes in earnings estimate between 8 to 15%, for the next couple of years, and that is what seems to have rattled markets a bit. So I think these stocks could be under pressure for some more time.
I think, Santo, of course, you take aside the weakness that the stock has seen over the past 4 to 5 months, especially because of the competitive intensity, but there is no, disregarding the fact that Muthoot still remains a quality stock, a very, very high quality company with a very high quality management in a very fast growing sector, right? Gold finance, of course, when people are trying to come in, that means that the sector is very, very lucrative for people. So I think overall, of course, right now you're seeing a very high competitive phase in this space. Earlier, there were only 2 or 3 major players. Now you're seeing that high competition. But when there is too much competition, that also leads to consolidation later. And I think as far as Muthoot Finance investors are concerned, I think the only thing they should be concerned about is that Muthoot should emerge at the top or probably somewhere near the top when the consolidation phase does come in. Apart from that, of course, I think the overall focus or strategy of the company is also quite strong in the sense that they are not trying to, disregard asset quality for growth. They want to maintain a good asset quality along with, whatever moderate growth they can get at this point of time, given the current, dynamics in the industry. And I think that is a very good long-term strategy. And lastly, the non-gold loan business. Of course, they're trying to diversify their business. The non-gold loan business, I think, is where the delta could come in for the company, wherein that segment could start contributing more to the revenues or the top line of the company going ahead. Of course, there also, analysts are not expecting, a trailblazing growth. They expect the pace of growth to be moderate because they do not want to, increase asset quality issues. They want to ensure that collection efficiency remains quite high. But I think overall, it's a high quality stock which is now available at very, very cheap valuation. I think that is something that long-term investors out there probably would be mindful of.
Maybe I'll have a similar argument for the next stock you're going to take up.
Well, LIC, I don't know about what long-term investors will do here, Santo. I mean, clearly, yes, the earnings for the June quarter seemed quite spectacular if you look at it from a year-on-year basis, but you have to also be mindful of the fact that the June quarter last year was severely affected by COVID. Their agents were, in lockdown, so there could not be much activity. So clearly, the base effect had a big role to play. But if you look at sequentially earnings have taken a beating across the board. If you talk about net profit, you talk about value of new business, you talk about value of new business margin. The biggest, of course, highlight of the earnings was the decline in VNB margins, Santo. I think that has been quite a sharp decline. Also, the company has lost market share in the first year premium segment. If you look at there, almost a 200 basis point decrease in market share on a year-on-year basis. So clearly, I think as far as the concerns around the fundamentals are concerned, they have played out, and I think that is why we had seen the decline in the stock price that we have seen since its listing back in May. Now, Macquarie has surprisingly upgraded the stock. They have upgraded the stock to outperform from neutral, just arguing the fact that the valuation at this point of time appear very cheap. But also to be noted is the fact that they've cut down the price target by 15%, Santo, because they feel that there should be a PSU discount attached to LIC because of the fact that it's a government-owned company. Now, therefore, for me, given that PSU, discount, that in itself makes LIC, unattractive compared to an HDFC Life or an SBI Life out there. So for me, the upside on that stock probably will always be limited.
Well, hard to make a case in favor of LIC at this point in time. As you pointed out very clearly, on a year-on-year basis, the numbers do look very flattering, but sequentially, clearly there is pressure and more negative there. And according to MK, the 13-month policy persistency of 63% is also one of the cause for concern. But in favor of the stock, what I would say, CJ, is that valuations now have come to the point where the downside clearly looks limited. You may argue that the stock doesn't have much to go higher at this point in time, but given that valuations
close to its 52-week low of about 650,
and also rising share of non-par products, which already we are seeing a trend, that will be some bit of adjustments there. So that also should probably help improve the financials of LIC going forward.
Yep, possibly. I mean, of course, the management has been quite robust in stating the fact that they are trying to improve a lot of the things that analysts have been asking them for. But I think it will take at least another year for the market to make a sense of whether LIC is headed in that direction or not, right? You can't probably, this is the first quarter, second quarter or quarterly earnings that have come out after the company's listing. So clearly it's still a very newbie in the market. I think it will take another few quarters for the market to make full sense of where LIC stands. And I think that is why you would probably not see institutional investors being too gung-ho about the stock, even though maybe retail investors might get in for the short-term gains, like we have seen the bounce back from 650 to almost 700 rupees now. But I just feel that from here on, it is possible that you could start seeing some profit booking from speculators.
Well, next stock is Fortis Healthcare. The stock too has seen a good comeback over the last month from a low of around 226 in June. In July, it's rallied to about close to 290 rupees. And there is reason for the renewed interest in the stock. One clearly is that occupancy levels have now almost gone back to pre-COVID times. That at present the occupancy level is about 67%, and the management expects it to improve further to 72%. Margins have been under pressure for now, but again the company is hopeful that they will be able to hit the 20% EBITDA mark within the next couple of years. Its has undertaken some brownfield expansion also, which the company believes should help boost its EBITDA margins. The worry at this point, CJS, however, is the diagnostic business, where there is intense competition at this point in time, and there the picture is not looking very rosy, and they expect, while the price war clearly is unsustainable according to the management, it could continue for some time, and this is something they are planning to scale up in a slow way.
Clearly, I think, Santo, of course, you can't really find much fault from the earnings performance of the June quarter, and clearly the hospital business is doing quite well, and this is despite the fact that almost 9 of their hospitals are still making less than 15% in margin. So the room for improvement is also quite big out there. So therefore I think it will be a little tough to bet against Fortis at this point in time. Clearly the company has shown that it can make a good recovery from the COVID lows. Yes, SRL diagnostic is of course a point of concern, but I don't think that investors will be too bothered about that, because given the fact that at least it is something that is an industry-wide concern, it's not really specific to Fortis, and therefore should not probably have that much impact on valuation. The only concern would be from a short-term perspective is that stock has already rallied about 20% or 20% plus in the past 3 months, and I think there could be possibility some investors will want to take some profit booking going ahead. So I think therefore probably some bit of consolidation cannot be ruled out over the next few weeks or months, and maybe by the next earnings season, if we see a similar performance, then you can see a new next leg up of rally in the stock.
Well, the next stock is something that.
I mean, Santo, what a recovery it has been for Zomato. Clearly, I mean, the stock is now almost at 63 levels from almost 48 at one point of time. Clearly, the sentiment has got a an uptick after the earnings performance of the company, which turned out to be quite good and quite opposite of what market was fearing. And I think the fact that as I have learned, I mean, talking to dealers and all, that a lot of HNIs have also started taking position in the stock, especially in the last correction that we saw when the stock dipped towards the 48-50 mark. That is when a lot of a high net worth individual got into the counter, and the belief there seems to be that I think the worst in terms of the Blinkit acquisition, a lot of the the cash burning that the company was going through, that is probably behind. The management has clearly stated that they want to conserve cash going forward. They have also stated that probably reduce a little bit of the expenditure that they want to do in Blinkit, and plus the focus is clearly now on profitability along with growth. So I think with that given, probably the upside for Zomato now, at least till the IPO price is reached, seems quite good.
Well, there's where perspective comes into picture. For a long time, the stock had been quoting around 55 levels after the hammering that it took. But what happened is, in between, it went down all the way to 40 rupees because of the big overhang of some of the earlier investors wanting to cash out, pre-IPO investors wanting to cash out. Now, since then, the stock has now rallied almost 50%. Very little consolation for those who have been holding on to the stock for a while, but for those who sensed an opportunity and felt that 40 could be some kind of a bottom, they are making good money. And the volumes in the stock have risen considerably over the last couple of weeks, because a lot of HNIs have taken they've taken exposure to the stock when Uber was selling its stake. But it also means that many of these HNIs, at least that's the market chatter, they are looking at it more from a short-term point of view, and there's quick money to be made. So the high volumes also could probably indicate that there's already some churn is underway at this point in time. So that's something one needs to be worried about.
Santo, I think the fact probably, they say things get worse before they get better. And I think for Zomato, the fact that these, pre-IPO investors chose to sell their stake, I think in a way it turned out to be a good thing, because now there is probably less risk of such a big supply coming on going ahead, right? Those who wanted to sell probably have sold out. Maybe another 1 or 2 investors might want to trim their stake going ahead, but large part of selling is now taken care of, right? So now investors and traders can move on to focusing on the basics, and that is fundamentals of the company, the growth prospects of the company. And I think that is where a lot of the relief is coming on the counter, and that is why probably we are seeing HNIs also get involved.
But I think, CJ, this could be more of a strategic bet. You will see some sharp moves on either side, which could give opportunities, but it could be a while before you're going to see those levels of 160 which
has that is true. That is definitely true. I don't think I'll be that optimistic to suggest that probably 169 is just a stone's throw away. But I think the next goal for investors out there would be the IPO price of 76, and I think from there we see where the stock goes.
Well, last stock on our watch list this afternoon is Astral Pipes. Decent set of June quarter numbers. If you look at it over the last 1 year, the company has been quite consistent in its performance, but the big worry for the time being is the margins, and already the company has warned that there could be further inventory losses in the second quarter because of the sharp fall in PVC prices. So, that is something that market seems to be worried about, which is which kind of indicates why the stock is under pressure at this point in time. So, CJ, a good stock, but I think near term clearly there is room for caution here, considering that earnings could be under pressure.
Yeah, definitely. I think if you're looking for a tactical bet on Astral Poly, I think you're in the wrong stock. Probably, I think Astral Poly, is one of those stocks which came into prominence post GST, wherein the entire theme of informal to formalization that was going on, and it's still continuing. I think Astral is definitely one of those stocks, because if you look at the company's performance in the pipes and adhesives segment, clearly there are signs that the company is gaining market share there. And I think overall also within the pipes industry, Astral probably remains the high quality bet that to gain more market share going ahead. So I mean, you will probably never get it wrong by betting on a company which is gaining market share. Yes, margins at this point of time are suffering, but they're not suffering because of high competition or because the company is sacrificing margins to gain market share. They're only suffering because at this point of time, raw material prices have been so expensive, so high, right? And overall, I mean, if you get the feel from India, the commentary from corporate India is that Q3 onwards is when you will start seeing the effect of the recent decline in crude oil prices and commodity prices start to come into the profit and loss statement. I think if you're betting on the long term, then probably you will be able to get past the current pain.
Well, with that, CJ, what do we have to keep an eye out for?
Well, Santo, the earnings season is clearly over, so not much to look forward to. But on the economic front, clearly the US industrial production data that will come out later in the evening for the month of July, that is something that investors will be watching out for. Although it's not a very key data point, but it will be another data point adding to the list of big data that we have seen come out over the past 2 weeks, and probably help market form an opinion as to what the Fed will do at its next monetary policy meeting. So clearly it is something to watch out for. Along with that, keep an eye out on what is happening with the US the euro dollar peg, because clearly there is expectation that the US dollar index could strengthen in the coming weeks, and therefore the euro dollar peg could again go towards the parity. The forex market clearly remains the most interesting market at this point of time, even though it's the stock market that is stealing the headlines, Santo.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.